this kind of information from my, some bankers out there, it's down about 79%. So those are good things to know, but like I said before, uncertainty brings great opportunity. Millionaires are made in a recession, whether we're in it, going to be in it, it's going to happen sooner or later. Why is this all happening? Why is there such a big demand for housing and yet there's low supply? We all know that the mortgage rates right now are 3.5%. So that's driving the economy and the supply for housing. Since sellers are getting more than the expected prices, Redfin expects more new listings to make for a more balanced market and home sales. We're expecting the economy to have new home buyers of 70% that heads to the real estate market. That's been the largest since 2005. 70% more going to be new home buyers. Why? Close to the family, lower cost of living, less taxes, a more desirable area. So these are just some of the reasons why people are moving. Expensive cities, like David said, New York, California, San Francisco, is not in big demand. Should you be buying this? I mean, if you can afford to wait and hold on all that, that's your plan of action. By all means, do it. And I like to go with migration, with job growth, economic growth, and population growth. I look at where the people are going and where there's a need for either a rental market or homeowners that want to buy. Most homeowners are buying, everybody's seen it. As a lender, like Kevin Clark said, we provide you proof of funds. And why am I saying that? Is because every seller, every real estate agent wants to make sure that they're working with a person who's got the capacity to close, otherwise don't waste their time. You're putting in offers, that's great, but if you don't have the capacity to close, you shouldn't be buying a deal. 2021 is going to usher, which we're already, a very price competitive market, which real estate agents and buyers are seeing. And again, why? Because a low volume, a low inventory, and low inventory, but also low rates. If the prices of houses are right, good conditions, desirable neighborhoods, like I said before, good population growth, job growth, economic growth, it will sell quickly, which is still good. 2021 is going to usher 2021, Americans are moving across country lines $14.5 billion. You can look at all moving sites, all data researchers, 14.5 million people are looking to move to a different city, different state, where, like I said before, lower cost of living and the lower price competition of prices. And this is the biggest surge since 2004. Steep competition has increased the sale list. Buyers of owner-occupied properties will pay for a listing because it's a desirable home, a desirable area, moderate price range, affordable interest rates, more working space and living space. And also closer to their families and upsizing their lifestyle. So if we think about it, it's all just an emotion. We want to move to a bigger place because we're, probably working from home. We want to live next to our children, our grandchildren. We want to go to the suburban areas where we can get more for our buck. So with that said, David said, there's going to be a surge of properties coming up. Everybody can, sit back and wait. That's great. You notice everything over here, by the way, all these contents of great authors that are speaking out there. One of my favorites is Jim Rohn. Why am I saying this to you? Like David said before, there are plenty of books for you to read. That's going to create you a skill set, a mindset of what you have to do. As a lender also, I make 200 plus calls a day to my real estate investors, existing investors, new investors. I have to do the grind. Real estate is a grind. It's not a rich, quick scene out there. You got to do the grind, do your due diligence, make sure the numbers work, have a plan, whether you're going to make calls, whether you're going to be working with a realtor, a wholesaler, or it is a grind. But I'm getting back to the quotes over here. You got to be committed, because if you're just expecting a property to knock on your door and say, hey, buy me, you're going to make $100,000. It ain't gonna happen. So whether you need to cold call, whether you need to do a direct mail, whether you need to using an MLS, which is a realtor, expired and filled listings, vacant home listings, leveraging a current flip, a pre-foreclosure list, direct mail, code violations, and driving towards hours. There's no ways that you can find problems. This is what we're discussing. So you need to have you need to diversify your lead generation. When people tell me that I'm just working with a broker or one wholesaler, well, you're limiting your capacity. Why not have quite a few multis, wholesalers? Get all that you can out there. Even if it's websites, property shop, realty track, REI facts, or like David said, utilize all that you can. Subscription fees. You're spending a few $100s. You have to spend money to make money. Nothing's going to come up when you're doing it free. And when you're spending money, you're putting in your time, your effort, you got a chair, and hopefully you'll get that lead generation. We're going to be discussing some ideas over here. So MLS is obviously using a realtor out there. You can engage them. Like anybody here out there, a realtor, you should meet them. Like I said, they're working on opportunities to grow. They have, some of the best sources out there of finding properties. They're going to be doing their MLS research for you, defining your city, your state, your private price range. So we'll go back.
Yeah.
Okay. So when you're looking for a realtor, you're talking your properties and you're filtering the state, your city, your price range. Why do you also, like David said, for properties that are 5 years old, when they have equity, and maybe these homeowners want to get out. So reach out to the agents, give them a written offer, give them an offer, show them your proof of funds of any lender that you're going to be using. It's going to show, first of all, confidence in you that you can execute a deal, and they'll be more happy to put you on the next deal if it doesn't work because they're going to see that you're qualified already right at this deal or what's some other deal. Okay, so expiring and withdrawing listings is something I'm not too sure a lot of people know out there. This is something that MLS agents use. When a listing is expired, it just goes into a different pool, like this, the red X, and you should tell your realtor to, any expired listings that are unexpired or withdrawn, the seller took it off the market for that reason. And see what's out there. That's a good way to find, maybe off-market deals, to find off-market deals. And also, you can reach out to the seller directly. You can go on Redex. You're not going to get a property that's the expired listing, but you can put in, Somerset County, and you can put in the price rate. It'll give you a whole bunch of properties already out there. And this is where you're if you got the time, the skill set, and the mindset to do it, this would be a great way to find properties also. Good questions? Good? Okay, great. Okay, so the benefits of the vacant selling is that the sellers, they're removed, and the property is now a burden to them. Like David said before, there's a lot of motivated sellers out there. We just got to find them. This pandemic has created it, where their children haven't heard of the property or probate, or, again, they just, people went to move from migrated from New York to Florida, like you said, and this is a good way to find these type of properties. So, the owners don't want to force them too much money, they don't have the time or the patience to be a landlord anymore. The investor of the property hasn't been able to find a tenant, they may be motivated to sell and move on from the property quickly. And if the seller is an investor, and he's not interested in selling that particular property, but you never know what else he may have for you. So it's important to know, like David said, if you want to go out there to foreclosure courts, landlord-tenant courts, you need to meet, network, and opportunities to grow, and that's where you're going to meet the great people out there to build your wealth. But you're going to be finding, hopefully, some people out there that are motivated. Living in the neighborhood of your most recent split. So if you're in the neighborhood, you just bought a split, you want to rehab. Basically, that's the best time to be knocking down doors. Other landlords, other neighbors in the area. First, you can tell them, hey, it's selling you, I want to buy my property, it's be available in a month or 2 or 3. Or you could say, there's anyone that wants to sell their property. I'm an all-case buyer, I can close in a week or 2. You want your neighborhood to be beautiful and fixed up, and that's what I'm here to do. This is a great way also to leverage your own neighborhood where you're investing already to find some good deals. Put maybe some flyers out, maybe do some door knocking. You could also do, door hangers out there. I know some old-fashioned ways to do work for real estate investors. So anybody know what door-ins are? It was great, and door knocking is a great way to meet the people. And again, I'm keeping saying what David said. You don't know who you're going to meet, when you're going to meet, and how it's going to work out. You meet a neighbor who doesn't know a landlord right now, but how about in a few months if there's next 34 months to sell? As you say, well, wait, I got this investor that came to me, never give him a call. You don't refer to it. Every landlord that you find, every seller that you find, they're going to give you 10% of the deal or $1,000 referral fee. First of all, the referral fee will help that more inclined to give you those. The same thing also, again, the one's property, the area, the neighborhoods look beautiful. Circle prospecting is a great way to skip trace. You know, everybody wants to know how to skip trace. I'll give you some information out there. You can go to a skiptrace.com, skipge.com, backflipping.com. There's a great website to skip trace. For all of you who don't know what skip tracing is, it's finding out the property owner's information. Name a number, and when you're calling them up, you know, you got to be careful what you're going to say. You have to think about what you're going to say. But most of my investors, what they say is, my name is Archie. I'm a real estate investor, and I see that your property may be up for sale, or maybe that's trouble, whatever it may be. Maybe there's a dump truck in the driveway, or the roof needs fixing, or maybe it's open curtains with the foreclosure slide, or open curtains with an eviction notice. These are great ways to find some properties. So that's where you're going to be circle prospect. It's a USPS website that provides you all data of zip codes, how many retailers are in the neighborhood, how many residential, how many commercial properties, how many families are living in that neighborhood. Maybe it's a great website to use so you can work, identify your area and your plan of action, whether it's flip or buy the whole. Or turn right. Another website is called Core Logic, CORE It's a website again that you're going to find properties, the values. You can determine if your values are correct. If you want to make that offer, the value, the tax assessments. It's going to see you to a website called Realist. It's going to give you tax records of value with property inside. Okay. If you're looking for pre-foreclosure, this information is a little bit old. I don't right now have a lot of pre-foreclosures out there. But if you go to foreclosure.com, it's a great website. What you're going to find there is a lot of the pre-foreclosures. Also, the Property Shark, Realty Track, HubZoom also can help you find some pre-foreclosures. People are going to laugh at this one. Right? Inundated with property owners looking to sell. Why? They're either embarrassed to put up a sale sign, or they can't afford to pay that 5 or 6%. When you look on Craigslist and you'll see what your property is, they'll give you your price. Also, when you're on Craigslist, go to the rent detail and say, look, I see that your property is for rent. I'm an old cash investor, and if you're ever looking to sell your property, you need all this is what I do. So you can use it for the opposite effect. The opposite method, but get you the same effect.
Foreclosures. Direct mail.
Okay. Direct mail done the right way. So you could choose your ideal property and then reverse engineer it to, for example, where are you buying? What is your price? What is your rehab budget? What's the point? What is your ARV? Because if your ARV if your plan is 300,000, don't look for direct mail to campaign to houses in an area that's going for $1 million. Doesn't make any sense. So you don't want to throw away bad money, good money into bad investment. By doing that is doing it carefully by looking at your property price range, your ARV, and your rehab budget. So you can make sure that you're putting your dollars into the market for your direct mail campaign.
Sending it to homeowners, they might be willing to sell for the purchase price. How do you achieve this? So you don't want to just send them out to homeowners and hope that they're going to call you. It's a 50-50 like anything else, but it's a numbers game. We all agree with that. But making sure that, like Dave said before, that you got 5 years of home ownership or more. This way there's equity in there and they're more inclined to sell. So that's something to look out for also. The best practices for the content of your piece in the email in the mail should be that you're, again, a local investor, a low cash, put your name, put your company name, what your timing closing is. I can close in a week or two. And if you're ever looking to sell, here's my information. Also, what you could do is you should put everything in a spreadsheet. So you could always track down your number that it's calling from. I have a sideline number. You could use a good Google number. You don't want to confuse your personal phones and text numbers with your business. So you could use a Google number. I prefer something called sideline.com. It costs $10 a month. This way you know what's business text, what's business calls versus your personal calls. Questions, anyone? You all good? Great. Okay. So what are the pros of direct mail campaign? The pros are it's inexpensive, not too time consuming, but the cons is that it's not impersonal and it's very reactive to instead of proactive. You're not actually meeting the people, negotiating, building up rapport. Like David said before, you work with people that you know and trust. Skip tracing. Well, the pluses are more likely that you're going to speak to a seller and you're going to increase the chance of conversion because you got their information. But the cons are it's difficult to confirm that you have the correct number. And if you don't have the correct number, then use another skip tracing company. The numbers, the names that I gave you, you can find many more on Google, but those are the 5 that my investors use. So if you don't have the correct number, just spend another 10 or 15 cents. You may have to buy it in a batch, maybe for 100, I'm not too sure, but it's worth the investment because if you actually reach a seller that wants to sell or a homeowner that's desperate to sell, you don't know how it's going to come, where it's going to come. So it's good to keep in mind. Door knocking, what's the pros? They're more likely to speak to the seller and see if the property in person is engaging the strength of the opportunity. The cons are that people don't love solicitors. It's more time consuming. They don't trust. More likely they, to ensure that they have a door hanger or a letter that you can leave behind if they're not there. Sometimes, when I'm cold calling people, and I'm not saying cold calling, cold leads, I'm cold calling people that came to me days ago, weeks ago, months ago. I always tell on the phone, on my voicemail and or text, when is the best time to speak today from 10 to 3? When is the best time to speak tomorrow between 10 and 1? Set the date, set the time. They're going to see that you're serious and you're persistent. Hopefully that's to push their buttons a little bit to see that you are a committed real estate investor. So driving for dollars, pretty simple. Spend time driving around. When you're driving around, look at your surroundings. Like I said before, you may have curtains that are open. You're seeing an eviction sign, a foreclosure sign, maybe a dumpster in the driveway, a roof that's dilapidated, a lot of garbage, whatever you may know. Put a door hanger, door knock, write down the address, and do your skip tracing. That's the best way to find properties. And this is, if you think about it, hopefully off-market listings. So a popular thing to have is a yellow letter styling the marketing pieces printed out on a large sticky note, like a pad, so you could jump out and act quickly and leave the note and stick it to the front door. Basically what that's saying is if you ever get those letters in the mail, it looks like a sticky note or things like that. It's just an idea how to make it a little more catchy. But again, put your name, put your phone number. I'm an active investor. I can close in a matter of weeks and get you to a solution. Like I said before, jot down the address, stop by, put it into maybe a spreadsheet, a notebook. Put it first in your notebook if you're driving around, and then when you get home, put it into a spreadsheet because you want to keep information handy. Even if you're calling a guy today, but in a year from now he calls you up, you want to know what this guy is saying. But when you search your spreadsheet of his name or his phone number or the address, it's important to always have that information handy for yourself. So what we do, just quickly, is we specialize, like I said, in fix and flips. We do any city, any state, any property. Like Kevin Clark said from his company, proof of funds is very important. We provide that totally free. We do also an extra thing also is we'll provide you the economics on a deal. So if it's a fix and a flip, I'll show you the profits, the return on the investment. And if you tell me, hey, Marty, I want to keep the property, I'm going to make sure whether you use me for the permanent financing or you go to a bank, that it qualifies with the debt service. Should I go over the debt service? Anybody over here? Anybody know what I'm going to explain what that is? So right now, lenders want what's called like a 1.20 debt service. What that means is that the property has enough cash flow to pay for expenses, taxes and insurance, the mortgage debt, and have 1.20 left over to make sure that the property has CapEx, uneventful scene or a situation you're going to have in years or months away. A lender doesn't want to see where your tax. Let's assume your income is $10,000 on the property and taxes and insurance is $5,000, and the mortgage is going to be a year. Principal and interest is going to be $3,000. You got $2,000 left over. Just to give you an example, that's what debt service is about. We want to see that you have a lot left over. So I shouldn't say a lot, but 1.20. So we are at 1.20. However, the good thing to say is that we do have a program for the people that want to buy an investment property and hold on to it, whether you're strictly doing an acquisition or you're turning it into a BRRRR, which is buy, rehab, rent, repeat. Again, buy, rent, rehab, rent, refinance, and repeat. So if you're looking to do that method or a strict acquisition, it's good to know that I'm a lender also that could do with 1.0. So if there's no extra cash at the end of the day, there's enough just for the mortgage, the tax, and the insurance, I could do it also. It's going to be a little bit higher rate. And I want to get into the rental 360 because David, expounded on that. And it's good to know something here, that when you're buying a property for a flip, and let's assume you're going to make $50,000, whatever that tax gate is, I don't know, Ron will tell you, or your CPA will tell you, you're going to have to pay taxes on it, or you could do a 1031 until it lasts, that ruling. But when you're buying a rental property, you got a few great aspects. First of all, you got a property that's yours, you own it, you're in control. You got cash flow. You got forced depreciation over 27 and a half years. For every $100,000 purchase, you're deducting automatically 3.63. So if your property is bringing in 10 grand and you bought it for $100,000, the first $3,600 is tax free. I just increased my cash flow by 3.63%. If it's 200,000, I just got an increase in my cash flow of $7,200 because it's not going to the government. It's what's called forced depreciation. It's automatic that the IRS does for you. And like we said before, we get forced appreciation right now with this market the way it is. But let's be real. If the market is always here to stay. So why are we mentioning rental 360, which is permanent financing? You got forced depreciation, you got forced appreciation, you got a property that you're in control of, you could raise the rents, you could do whatever you want with the property, sell it, and most importantly, after a few years, you built up enough equity, again, refinance, repeat, and take out the cash and buy more properties. Right now, I just bought a house in New Jersey for $1.1 million. I took one of my homes, I cashed out 75%, and not hardly any money out of my pocket. And another house of mine, the rental income is paying my new mortgage. So this is great about real estate. It's about diversifying. So just quickly about rental 360, loan amount $75,000. It says here $2 million. It's old now. We can go up to $3 million. The rates, again, this is old. So rates right now are hovering around 4.5 to 5.25. Stated income, no doc. Stated income, no doc. Whoever doesn't know what that means, you can do it many times over. No documentation such as tax returns, no W-2s, no income verification. And unlike a bank, we're going to give you a 30-year AM where your payments are lower and your cash flow is higher. If you can go to a bank, yeah.
This one is a 30-year fixed rate, no stated.
Stated.
So stated.
Stated. Right. Light doc. Let me rephrase that. Light doc.
What kind of rate on something like that? I know it varies.
Yeah.
What's
It's
the
all.
lowest rate?
So it is score driven. So we want a 650 score or above. And the rates right now, like I said, are anywhere from 4.5 to like 5.25. Fixed, whether you take 5 years, 10 years, or 30 years, and you can even do a buy down. So even if you're at 5.25, for 1 point, you can bring down your rate to 5 or 4.95, something like that. So that's a good thing of knowing about that.
What's the minimum?
75,000 up to 3 million.
That's the percentage.
No, that is the loan amount. So as long as we're loaning you at least 75,000 to 3 million, that's 1 to 4s only. Only requirements, 1 of 3. Own a primary, and if you don't, have some mortgage history, and if you don't, you're willing to hire a property manager. The thought behind this, as a direct private lender, we don't want the investor to eventually living in there because it's a stated income, no doc program, okay? So that's the good things to know. The leverage we could do on a purchase up to 80%. If it's a refi, unrestricted 75% cash out. Yes, David?
Marty, does it have to be in a entity such as an LLC or corporation?
Any type of entity, we don't lend to individuals. And by the way, that's a great thing he's bringing up. When you're buying the property under individual, people tell me, oh, I'm getting 3.5, I don't want to pay 4.5. Okay, so you're not going to have that forced depreciation that the IRS gives you of 3.63 for every 100 grand in that 27.5 years, over the 27.5 years, and you're exposing yourself to the most litigation as possible, because if anybody falls down or anything happens to your property, who's being sued? The individual owns the property. But when you have it under an entity, you're sheltered with that. They can only, God forbid, sue you under the entity, not your personal assets. So that's a good thing to know. Any other questions?
How would you work it then? You have a property now in your personal name, you want to buy something else, you're going to 1031 exchange it. How would you get around that? And it would have to be an entity.
So you have a 1031 and you want to buy a new property that, yeah, so the new property, so as long as you transfer it over, I don't care. So you can own a property right now and say, I want to refinance, it's under my name, Martin Chira. You open up a new LLC or an existing one, transfer to there, your title company could do it. We could steer you on how to do, help you how to do that, not a problem.
I'm saying buying the new one now.
Buying the new one.
Would be in, because I'm being told in 1031 exchange, I have to title it the way it's titled, the old property is titled.
So with me, well, yes, that is most of the time the cases, but if you, call me tomorrow and I'll speak to my underwriting department, I'll get some more clarification. Most of the times, yes. And by the way, David, correct me if I'm wrong, that 1031s, it has to be the same type of property. If you're on a primary, you can only buy a primary again. No?
No, they're pretty liberal about how they define like kind, but it can't be, like, it could be an apartment for a single family house. But it can't be a car or a boat for a house.
Got it. Okay,
But
got it.
a lot of this is going to be changing shortly, so we're waiting to get the final rule.
Got it. Okay. If anybody looking to buy commercial properties, mixed use, shopping centers, industrials, self-storage, we do that also. Again, it's a little bit old, forgive me, that 50,000 is now 100,000, up to 15 million is correct. Rates, believe it or not, this is a stated income, no doc, just similar to the rental 360. Rates will be hovering around 5.75 to the mid 7% range, and closing time, 1 month, that's it, with us as your direct lender. So you're getting the leverage of hopefully, well, again, this is old, forgive me, it's about 80% leverage on a commercial. Typically, right now, they're falling in about 75% leverage on a commercial property. Rates somewhere between the mid 5s to the mid 7s. Very light doc program, closing in 30 days. And like I said before, it's a 30-year AM. So what that means, cash flow is higher because your payments are lower. If you're going to a bank and you're qualified with your tax returns at a better rate and you're getting a 30-year AM, I want you to go there. I don't want to hurt you. Definitely, if you're bankable, go there. But keep in mind, a bank is looking at the global debt service, which is your personal information, and then the property debt service to make sure that everything works out well. Your income is going to be based on how much can you afford on this property. And if it only suffices for one, what are you going to do for the next one? Hopefully you'll come for me for that. So to let you know what we do. Multifamily and mixed use right now is, again, it's a no doc commercial. The reason why I'm saying that is because our minimum is 85,000 up to 10 million. Again, forgive me, the rates are lower. Right now, they're hovering on the permanent financing around 5 to 6% with a 650 score. Does anybody here do mixed use at all? Nobody? You do, David? Okay. Good. So if anybody that doesn't, especially for you, David, we just want to have a residential component that is 51% or more square footage, and anything with commercial, retail, they want to make sure that they're not affected by COVID. Bring me the deal. Like I said before, networking is an opportunity to grow. You don't know who, what to ask. Don't worry, ask. And if I can't help you, I'll steer you in the right direction to get you your funding that you may need. So that's as far as that with my programs out there. Any questions before I go to the next one? Am I talking slow and good? I'm going to touch 1 minute on what David Corsi said about the books. I couldn't really see too good about the books, but I will say I've read a lot of books out there. If people want to read about prospecting and networking. Jeff Blunt has got a great book out there about networking and prospecting. And then also he's got a book about objections. And it's not just for me as a salesman, it's also for you as a negotiator working with prices. You need to get to their emotions on why they want to sell, hit on their pain points, focus on that. And most importantly, what Jeff Blunt says is ledge their objections. So if they're telling you, I don't want to sell, ledge it by saying, great, if you don't want to sell, when is a good time you want to sell? When should I reach back out to you? If they're saying, oh, your offer is too low, great, what is going to work for you? Don't be afraid to ask these questions because that's going to help you to get your deals. But just talking about books, they changed my life around. And I love all these quotes over here by these famous authors. So Jeff Blunt is a great book to read. Jim Rohn has got a great podcast out there. Mindset, skill set, push yourself, be committed. Do the things that nobody else has done to get what you want. Because people will give you advice, but they're not going to help you to get what you want. And most importantly, what Jim talks about is writing down your goals. You should write down your goals. How many houses do I want to flip this year or buy this year? I want to make $1 million. And how are you going to get there? Make 20 ideas out there. How am I going to get there? And out of that 20 ideas, you're going to look at maybe 10 or 15 of them and say, you know what? This is real and I'm going to work on it. And by the way, if it's not working for you, those 10 or 15, not all 10 or 15 won't work, but some of them may not work, tweak it. Doesn't mean it's wrong, just tweak it. Maybe it means more calls. Maybe it means a powerful sales call. Maybe it means, countering their objections and getting to them. Maybe it means, finding more ways on finding properties, and that's what it's all about. Okay. I'm ready for the next one. Okay. So OPM, like I said before, other people's money, why, when, and how. High leverage means a higher return on the investment, which means a higher profit. Alternative strategies for using your own cash and why it's a turn of page. And too small for me.
Is that the last slide? All right, I think we got to go over to the other presentation, huh?
Oh, this is it. This is it. Structure, analyze. This is it. So go to the next page.
It's the last page I have.
Oh yeah. So maybe you skipped through it. So then go back to the beginning.
Oh, back to the beginning?
Yes. Go to the next page. The next one. Okay, so we did this one. I apologize. Okay, so go to the next slide.
Let me know when it's done.
No, the next paragraph.
Next presentation.
Yeah.
Okay, so this is all about structuring your company, analyzing a deal, and then strategizing what you want to do. Don't go in haphazard. Like David said, you want to go in with a plan. You want to go with action. You want to know what you're doing. Is it a flip? Is it a buy and hold? Am I correct, David? Right? Okay, so structuring, you want to start, if you have newbies out there, you want to structure your financing, your partnerships, who you're going partners with. Are you going partners with anybody? What type of an entity? Are you doing an LLC, a corporation, S Corp, C Corp? I can't answer that for you. Talk to your CPA, your lawyer. Do you need a lawyer? I mean, as an investor myself in Jersey, you don't need a lawyer to represent you. Just when I make a recommendation, I would hire one for the first few deals, and you'll look out for your interests, making sure your contract is valid and good. And hopefully after a few deals, you're gonna learn, know what to expect, and maybe you could do it on yourself. For states that require a lawyer, you have to have a lawyer. New York, you have to have a lawyer present. And look, I'm under the impression always to hire a lawyer, but it's up to my mindset. I'd rather be protected and spend $1,000 or $2,000 more than to lose out on my hardcore deposit, have a bad deal, just a sentence or a word that I didn't understand that got me hurt. So that's what's very important. Your title company, insurance company, and so you're getting all your financing in place. Analyzing to make sure that you don't throw money away, do your research and have the tools, and most importantly, to strategize. Are you wholesaling? Are you flipping? Are you buying and keeping? Or if you're just flipping. So building up a team, again, for the newbies out there, building up a team is very important. Realtors, lenders, wholesalers, contractors, permit expediters. I don't know if that works over here, but just to let you know about that. Attorneys, title companies, insurance, and other investors. Again, when I said before, network is an opportunity to grow. This is what it's all about. So realtors, they're going to help you understand values in the market. They will be kind of your best resource of knowing your market and most importantly, knowing your ARV. Lenders will help you utilizing leverage by other people's money. And they're also going to be a second set of eyes, making sure your deal is profitable, successful, we're going to give you a consultative approach on where the market trends are going. One of my investors wanted to do the BRRRR, and he said, Marty, I'm going to be keeping the property. And I said, okay. And I gave him all the terms on the hard money. I gave him all the terms for the permanent financing. And then we said, give me the consultative approach. It's free. And let me know where the market trends are going. And I did that. And my team came back and saying that the property right across the street is going to be a warehouse being built right across the street. My investor's rent was going to be $2,000. And I came back to him and I said, who would want to rent this property for $2,000, 20 trucks coming in and out? Again, I will lend him, but I just wanted to give him that free consultative approach on where the market trends are going. Is it a flipper's market, a renter's market, a seller's market? What type of a market is it? And also a good lender is going to make sure, like I've had deals also where wholesalers is a great way to find properties. For all the folks who don't know what a wholesaler is, they're not selling you the property because you need to be a real estate agent. What they're doing is they're signing the contract. They went into contract with the seller, assuming for $100,000, and they have a database of buyers who want to buy the property. And they're going to say, okay, Mr. Buyers, here's this property, and I'm going to sign the contract for you for $110,000, $120,000. He's making a quick $10,000, $20,000. Of course, he has to run his numbers to make sure that that 110 is the current value of the property. Otherwise, you're dealing with a bad wholesaler and somebody who's not too wise and smart out there. But it's good to utilize them if you got a full-time job and you can't dedicate full-time to this business, this industry. It's not a bad idea to use them. But again, when you got a deal, bring it to your lender, bring it to David, let him run the numbers for you and just make sure that maybe this wholesaler is valid, the contract is valid, and things like that. Let me go back, I'm sorry. Contractors is your part of your team to get the work done. Attorneys will give you legal guidance and contracts. Title companies, we could recommend some great title companies for you. And by the way, when you're working with a lender that has a roster of title companies and insurance companies, we know what they want and they know what we want. So that makes it a smooth and a very quick process to close. Do you have a question? Oh, got it. Okay.
Excuse me, first off, I want to apologize. We didn't realize we didn't bring our big screen. So for anybody who's having trouble reading this, we will put it out there so you guys will be able to make sure that everybody will get you the slides so you can see it better. I apologize. Is this being done on Zoom? We got it on Zoom as well for members, but we'll also be putting this. So if you let us know, how can we let people know? Let us know if they need this. We'll set up something special on the website so you'll be able to look and have Marty's presentation.
And if you can't get it for some reason, give me a call. I'll give you the slide tomorrow. No worries like that at all. A good lender, I got a lot of my investors, they call me up and they say, hey, can you use my appraisal? we're gonna ask them good questions. Why? What's the reason? Did it come in too low the value? Do you want to counter it or something like that? But a good lender, hopefully, I shouldn't say hopefully, but is able to reassign it over to them. But we also want to make sure that the comps are there. But this is good to know because whether you have an existing appraisal, perhaps you could save that few $100s. We're also doing desktop appraisals now where they're quicker and cheaper and easier. Typical turnaround time right now on a deal in any state is about 2 weeks to get an appraisal guide back in. I'm happy to say that since we are based out of New York, but our #1 state is New Jersey, we have local appraisals that get out there within 3 to 5 days. So that's a good thing to know. And like I said, we'll do desktop. It's quicker, cheaper, and easier. All right. So a good, we're here to help you, not just with numbers and money, title companies, insurance companies, proof of funds, the economics on the deal. Next page. So where can you find a team? Whether it's realtors or other people, like I said before, is open houses. REIAs is a great way, networking, these events and webinars. Online sources like Zillow, Trulia, Redfin, Homes.com, and Realtor. Courts and auctions, social media groups, and Yelp, which is Angie's List. This is where you can find your team. Great place to find them is like these MREIAs and all these other REIAs out there to build your network. The next page, please. So, some good websites. Like I mentioned before in the other presentation, Craigslist, which is #3, but I'm going to go to #1, which is LoopNet. Wait, go back. LoopNet, Auction.com, Realtor, Trulia. Realty Track and Property Shark is very good for pre-foreclosures, but it doesn't necessarily mean that they're just because they're in default that they want to sell. Call them, find out their issues. I don't just say, hey, I'm Marty Chair, I want to buy your property. I'm going to say, I see that you're in pre-foreclosure, you're behind on your mortgage, is everything okay? I'm an all-cash buyer and I can close in a week or two. Is there anything I can do to help you? Get to their pain points. And by the way, if they say, no, I'm just in a situation because of COVID, or I had a death in the family, be empathetic. I'm so sorry. Is there anything I could do for you? Even if you can't buy the property, you never know, by you being nice to them and courteous to them and helping them out, maybe one day they're going to say, call up, this person, he wants to sell this property for you. So those are good ideas to bring out there. On our website, we have affiliate partner page. If you go to our website, expresscapitalfinancing.com, we have some great affiliate partner pages, not my companies, AAA companies that are going to give you ARVs, rental comps, properties, like I said before, of probates, tax liens, pre-foreclosures, foreclosures, any city, any state. MLS, like I said before, and REDX. Should I go into REDX? Does everybody know what REDX is? Anybody want me to explain what REDX is? Great. So REDX is a website that is kind of filtered from MLS. Again, it's expired and vacant listings. So us individuals, we cannot go into REDX. The only thing we could do and go into REDX is, again, put in a zip code, a particular county or state, and you're going to get a whole bunch of property owners, just naming numbers, and you're going to have to be cold calling them. But if you're working with a realtor, tell her, hey, honey, go to REDX and find me some vacant listings in, like David said before, in Monmouth County or something like that, and I want this particular city, state, and this is my price range. She's going to be eager to do it in a way because hopefully she's going to get a stale listing back on the market, whether it's hers or some other realtor. Other ways, like I mentioned before in my other presentation, is driving for dollars, networking like we're all doing right now, wholesalers, banks. It's going to be hard to talk to banks unless you have that relationship, but you can always start now. Don't be afraid to start something, because even if it takes you 3 years to get into a banker or 3 years to get comfortable calling up a banker, you're 3 years ahead of yourself in time. So be talking to bankers, courthouses, Craigslist, like I mentioned before, motivated sellers, and also rentals, looking up motivated landlords that just want to sell and they're tired. Mentor groups, contractors, plumbers, attorneys, and title companies. And I just want to touch on something that David said before. Don't spend $50,000 on a course. Why? Because your best education is your own education. Better you make a $50,000 mistake and spend it on somebody else, because that somebody else is not going to be, he's not going to be there for you every step of the way. And he's only going to give you information. That's all he's going to give you. But, my dad always said, your first loss is your best loss. If you learn something yourself, now it's a skill set not to do that again and how to perfect yourself to do better. You know, you could buy a franchise of Dunkin' Donuts at 42nd Street in Manhattan. It's the best location, maybe the lowest rent possible. Is it gonna be successful just because it's Dunkin' Donuts on 42nd Street? Doesn't mean a thing. If you're a good retailer, you know how to bake good cookies and donuts and bagels, and you open up at the right time and close the right time, and you know how to service your customers, only then will it be successful, because there are many franchises that close up. Why? It could be a bad location, but also maybe a bad operator. So analyzing a deal is market trends, where the property's going, the economic sheet, which I'm going to show you in a few minutes, and also a deal calculator. Next page. Okay. Market trends. Like I said before, we're going to give you a free consultative approach on where the market trends are going, whether it's a seller's market, flipper's market, renter's market. This way you can make an informed and profitable decision, whether you want to move forward or not. These are very good tools with a good lender to have. We're also going to be checking for high dense population, crime rate, like I mentioned before, with the boarded up areas. So this is important to know on your market trends. So what to look for in the market trends? Strong population growth, mix with affordable housing, avoid areas that were affected by COVID, like New York, California, Frisco. Avoid those areas that weren't already struggling pre-COVID and looking for opportunities in resilient markets where home values are stable or increasing. Like I mentioned before, go where the people are going, the jobs, the economic growth, the population growth. Look at these large corporations. Where are they going? To states like Texas, and that's where everybody's going in a way. So why not invest there if you could? I'm not saying, invest out of state, but I'm just saying is go where the money is, go where the rent growth is and the economic growth is. That was the next thing I wanted to say. Good.
With a lot more people work from home, how do you feel about cities?
Or suburban.
Well, I mean, it's like Philadelphia, I guess New York, we have your take on that, but even if it wasn't heavily affected by COVID, maybe even the fact that people are working from home more and more.
Yeah, I mean, look, that's fine. Again, it depends upon your plan of action, what your plan is going to be. Yeah, I mean, we'll lend in any city, in any state, as long as the deal makes sense to you and to us. Top markets of real estate: Austin, Texas, #1, San Antonio, Raleigh, North Carolina, Tennessee, Charlotte, North Carolina, Boston, Massachusetts, Dallas, Fort Worth is very hot. In Florida, Orlando and Tampa is on fire, I can't tell you, it's our #3 state. Atlanta, I just came back from there last week for a different purpose. However, it's a very hot market. And by the way, I went there and I met an investor at a courthouse in Newark, New Jersey a few years ago. And he goes, hey, I remember what it's about. Los Angeles, California, Seattle, Washington, and of course, most of New Jersey. I'm happy to say that New Jersey is my #1 state of lending out there. So the economic sheet, if you could please click on it. I'm sorry, Matt, I'm so sorry.
I'm jumping around. I'll stay on the page.
This is something that we kind of show you on a deal. We can't give it to you, but we're going to show it to you. So when you bring us a deal, assuming your purchase price is 200 grand and your renovation is 75% and your ARV is 400 grand, this particular deal, being in it for 6 months, again, if the investor told me that, he stands to make 119% cash on his money, and his profit is going to be $80,000. So that's a good deal, and that's at 80 leverage. Matt, if you don't mind, if you can go up to column E. Now, now it says put in 90% and put in 100%. Assuming I gave this guy a 90 and 100, look at his profit went from, I forgot what it was, 75 or 76 to $109,000, and his cash on cash went up to 319%. We're going to be giving you this. So we're going to show you, not just tell it to you, we're going to be giving it to you. So it's good information to have. Okay, if you can go to the next link. On our website is Deal Calculator. It's free. Open it up, use it. Again, my website is expresscapitalfinancing.com. Great questions for you guys to know. Ask your realtors, ask your wholesalers, ask whoever is giving you the property. So if you go all the way a little bit down that, right here. This is we call it the Deal Calculator. You put your numbers in. And again, if you don't know the questions to ask a realtor, an investor, or a wholesaler, they're all here. Anything that you don't know, for example, transfer tax, mansion tax, mortgage tax, leave it. It's already defaulted. It's like 99% foolproof. Leave it. And if you go all the way to the bottom, Matt, please. This is your own deal. Before you bring it to us, analyze it all the way to the bottom. And you're going to see also that this particular deal, oops, let me back up, is going to give you 108% return in 6 months by you putting in your information. And the profit is going to be $45,750. It's going to tell you how much cash you need and everything that you need to know. And the next steps is have your 10, 15, 20% down. If you're looking to do a flip, and if you're looking to do permanent financing, somewhere around 20, 25% down. These are great tools to have on our website. So this is how you analyze a deal. This is how what we do, and this is how we're going to help you. But it's more important, do it yourself first. Know the questions, get the answers. This way you can come and say, hey guys, this is my deal now. What are you going to give me? What kind of leverage? What kind of rate? What kind of terms? What do you think about it? Now we have all the information because you know it already yourself, and we're just going to be your second set of eyes. Any questions? All good? So you want to strategize and don't go in haphazard. Don't go in, let me just find a property, let me see what I'm going to do, let me see what I'm going to do. I did that in my early 20s. And by the way, there was no hard money back in the late 80s. What there was, how I bought my properties, was something called the American Express Centurion Bank. It had an open line of checkbook, if anybody knows what that is. That was my hard money then. My father killed me and said, you're crazy, paying 18% a year. I says, Dad, no points, no origination, just an interest rate. That's how I bought my properties. But today, it's how, that closed down, but now you got hard money and other ways of buying properties. But you always want to go in with a strategy. Don't go in haphazard saying, let me just get the property, let me see what I'm going to do. When you run the economics, do I want to make $45,000 on a flip, or do I want to keep it for the rental income, like David said, for the cash flow? And that's what you want to strategize. So whether you're borrowing, wholesaling, or flipping. The next. So what's the advantages of BRRRR? You're going to get the cash flow. You're going to get high return on the investment, built-in equity, potential to pull money out in a few years. You can always constantly refinance, buy more properties with it. And like David said, when you got 3 properties, you don't need to go in your pocket anymore for the 4th property. You can go into any one of those 3 or all 3 and buy more properties. So that's what it's called about other people's money, which is your own deal, it's your own property. And okay, the next one. What's the negatives of the BRRRR? Well, it may not appraise, which is not happening these days because everything is going through the roof. And by the way, I want to tell you that whatever ARV 6 or 8 months ago that I had on my appraisal that I already lent the guy, and now he wants to come in for permanent financing, those appraisals are coming in higher. So that's a good news also. Why? Because you're getting a better rate, you're getting a longer term. And if it was ARV 6 months ago or 8 months ago for 300, and now the appraisal on the permanent financing is coming in at 3.25, 350, you're getting more cash on the table. So other negatives are dealing with a rehab. You may need to come cash to close on your refinance if it doesn't appraise for the same value as the ARV. So let me give you an example. If your deal on a flip was $100,000 ARV, and assuming you got 90% leverage, 10% down, and your ARV is going to be 100 grand, now when it comes to the refi, assuming it's the same amount, you're not going to get 90%, right? Because now it's going to be max on a refi is going to be 75%. You will come out cash to close about 15%. Now, don't be alarmed. It's your money, it's your property, it's your equity. It's not going to any closing cost or any fee. Am everybody getting me over here, or should I go over this again? Everybody got it? I'm just going to expound that a little bit more. Maybe some people don't understand that. If you ever have to come up with cash to close, and I tell people sometimes, oh, you need 20,000 cash to close, and they're freaking out. But it's your property, it's your deal, and it's your money. It's going into your sweat equity. It's not an extra closing cost or a fee. And you can always pull out in a year or 2 later your money back and do whatever you want with it. And the only reason why you have to come up cash to close, if you got high leverage on a deal on a, let's say a fix and a flip, but it doesn't appraise for that amount for some reason, 3 or 6 months later when you're ready for the permanent finance. But I'll tell you all this whenever you got a deal. We're going to give you the best case scenario and the worst case scenario so you know what to do. The advantages of wholesaling. It's fast, it's simple, it's quick. Very little cash, I'm going to say, because you want to market it, and no credit is required because nobody's checking up your credit. It is location dependent. Where you're finding deals is where you're going to be, I should say where you're working is where you're going to be finding deals. And where you're finding deals is going to be your buyer's market. High demand, yes. High return on the investment, yeah, it's very little marketing money. So that's a good way to wholesale if you're interested in wholesaling. And by the way, if you don't got the money to do a flip or buying a hold, do a wholesaling first. Make yourself quite a few $1,000s. Even if you did 3 of them a year at $15,000 a pop, that's $45,000 cash. Now you can go into your first flip confidently and feel good about it. So when people tell me I don't have the money, I say, great, do wholesaling first. Just I want to touch something about money, capital. You know, as a lender, we don't source your money. So you're 10% down, 15, 20% down, whatever it is. I don't care where it comes from. It can come from your friend, under the mattress, because we don't source your money. So that's important to know, just to give you an idea about that. Because some people think that I need the money sitting in my account for 30 days or 60 days. None of that on a hard money, short-term financing. If you're doing the rental 360, which is the permanent financing, we do want a seasoning, I believe, of 60 days. Am I right, Simon? 60 days of funds to make a purchase. Right. So if you're doing permanent financing and you're doing an acquisition, which is a purchase, we do require that the money is sitting in your account for 60 days. Like he asked before, we could always transfer from an individual to a corporation, things of that sort. So wholesaling, the negatives, you may not have a buyer's list. You have to keep up to date with potential buyers. No guaranteed income whatsoever. But a lot of wholesales got a bad name now because they're overpricing their properties, thinking that they got gold. A good wholesaler is going to know the values of the purchase price now and the ARVs to give you hopefully a good deal. Any questions before I go to the next slide? No? Okay, good. Let's talk about fix and flips. You got potential to make a good profit, personal development. Rehabbing homes is rewarding and a quick turnaround. Now, when I say rehabbing homes is rewarding, I'm saying it kind of facetiously because if you don't got the patience, don't do it. Hire a specialist, hire a partner, get somebody to do it because it will kill you. Just today alone, I put up a fence around my pool and I spent $20,000 and I just got already a violation from my ordinance from my county that the contractor needed a survey and also needed a permit to do it. So I don't have the patience for all this type of stuff. It's a personal thing. But if you don't have the patience, hire a contractor, subcontractor. I can recommend them to you for you. I'm sure that David over here can help you with that as well too. But it could be rewarding if you have that skill set and the mindset. Next page, please. So the negatives, you could lose money. Any deal, there's no deal out there that's going to 100% foolproof, and it could be stressful. Hiring contractors. I just want to touch a minute on contractors. When investors come to me and they say, "Oh, I got a scope of work for 40,000, 50,000," one of my first questions as a lender: do you feel comfortable with that number? Yes. Is it your only contractor that you got a price, a scope of work? Yes. Wouldn't it behoove you if you got 3 offers? This way you know what you're doing better. And when you get 3 offers, assuming it's 40,000, 50,000, and 60,000, again, just my perspective as a real estate investor and as a lender, I wouldn't take the $40,000 guy because trust me, he's going to be more than 50 or 60 at the end of the day. He's just offering you a lowball price just to get in there. I would talk to the guy for $50,000, see what he's doing right, see what he's doing wrong, compare him to the $60,000 guy. Ask them both questions, why are you 10,000 more? Why are you 10,000 less? As an investor years ago doing, fix and flips, you may want to consider giving the guy a few dollars extra. Hey, you told me you're going to be finished in 2 months, but I'm going to do 2 things, Mr. Contractor. If you don't, by the 61st day, you're going to get a $1,000 penalty, maybe a week or a month or something like that. That's incentivizing him to quickly, get out of it in 60 days, or maybe give him a positive incentive that if you finish within 60 days or earlier, I'm going to give you, a certain amount of dollars more, because time is costing you money, taxes, insurance, the payments on the loan. So you want to get out as quickly as you can. Look at your contractor. Don't just take the first guy. Look at Angie's list, get referrals. One of my guys, I told him to get a referral, and he came back and he says, "Yeah, Marty, he showed me these great properties that he did." And just a long story short, we happen to have known that one of the properties that the contractor told him, that contractor never did the work. So not only should you be going to the contractor and saying, "Hey, show me 2 or 3 houses that you did," meet the owners of the properties, call them up maybe and say, "Hey, are you happy with this, contractor?" It's important because a bad contractor can kill your deal. It can kill your profits. It can kill your deal. This is the last page. That's the last page.
So.
That's it. Okay, anybody needs to reach out to me, my office number is 718-285-0806. You can do info at Express Capital Financing. And just want to reiterate, we specialize not just in fix and flips and buy and holds, commercial properties, any city, any state, any property. The only thing we won't touch is a primary homeowner property. That's the only thing we don't do. And thank you so much. If anybody questions, anyone? Yes.
Did I know everything?
718-285-0806.
Anthony, did you get one of these? Is there one of these by your? Okay.
You know, and by the way, and I'm sure Kevin will testify to this, work with a good lender. What's a good lender? Asking questions. It's not just about the rate and the points. Can he execute quickly? Is he going to review the docs? Is he going to get communication is key? We answer our phones, our texts, and our emails, and I'm sure Kevin does also 24/7. That is a good lender. When you got offers out there and they're being bidded, besides the proof of funds, you want to know that your lender is there for you to answer your questions to get you to certainty of execution. Thank you so much, and happy to be here.
Everyone, I want to thank everybody for coming tonight. If you are a guest, thank you for joining us tonight. We hope you consider joining our group. And does anybody have any other questions for us? No? In that case, everybody, thank you for coming and be safe. Please be safe going home. God bless.
Thank you.